when you think about these like Michael Saylor-esque strategy plays, the two, I guess, important factors to think about are NAV and volatility. So we know that at least for strategy, a lot of the buyers are hedge funds, which may or may not be interested in the underlying Bitcoin, but they really like the volatility that they can get from these convertible bonds that MicroStrategy is issuing. The other point is that MicroStrategy trades at a premium to its NAV. So the shares are worth more than the underlying Bitcoin. And DeFi Development Corp trades similarly. On your website, you list the volatility is 700%. I'm not entirely sure how that's calculated, but seems quite high. And then MNAV, so the ratio of market cap to NAV, is 1.8. So it trades at 1.8 times the underlying Solana.
Yeah.
So how do those two pieces factor into the business model at DeFi?
Yeah, they're really important. And I'll actually start with the multiple to NAVs. I think it's a really important concept for investors to understand. And frankly, when I was first joining the team, and I've known Joseph and Parker for many years. We worked together at Kraken, and we like to say like, oh, the interview process was so short for Dan. Like he interviewed him on a Thursday and he was in on Friday or something like that. But then I always tell people like, I had a 3-year interview process with Joseph, our very own Solana Jesus, where I worked with him so closely. So I was really excited when he asked me to join. But the thing I had to wrap my head around was that these NAV premiums that exist, 2x, 3x, sometimes as high as like 5 or 7x on some of these vehicles we're seeing, actually are not as irrational as they seem on the surface. And the analogy that I've been giving to TradFi investors to help them maybe understand this a little bit more is to just look at a traditional equity like, say, Microsoft or Meta. You wouldn't look at the value of its balance sheet cash and say, well, it's 10% of the market cap. The thing's at 10x NAV. Let's short Meta and Microsoft because, it's got to compress down to the value of its cash. You're not just paying for the cash as an investor in those companies. You're paying for future earnings accumulation, right? I'm paying for whatever they're going to earn in free cash flow or earnings per share in the following year. Treasury vehicles are more or less the same, right? You're not just paying for the holdings that exist today, but you're actually paying for that company accumulating a certain amount of whatever crypto asset it's going to accumulate in the future. So when we look at our own MNAV, there's obviously some embedded value that the market is giving us for continuing to acquire Solana on a per share basis going forward. So in that light, if you actually went and ran the math on, let's say, MicroStrategy, for example, the underlying multiple that is implied by the market on just its future Bitcoin accumulation, I think last I checked was somewhere around 4 or 5x. Just this complicated math to get into it. And you compare it to a company like eBay, which doesn't grow earnings per share, is this legacy business that obviously got clobbered by Amazon, and is traded around 12 times forward earnings, for forever. And they only really grow EPS through buybacks and things like that. So in that context, when you compare those versus a company that's acquiring an asset that is outperforming the S&P, outperforming most of the Magnificent Seven stocks, in some ways, again, I can't comment on our own equity, but I can comment on MicroStrategies. You might look at those NAV premiums and say, maybe they're actually due to increase rather than compress.
I think my response a little bit to the comparisons to these tech companies, Meta, Microsoft, eBay,
Sure.
is you're trading on earnings, which are a real thing you couldn't get exposure to in any other way. But with DeFi Dev Corp or strategy, you could go and buy the Solana and stake it, or you could go and buy Bitcoin. So that's a little different, right? You're offering a vehicle for an asset that people could also just buy in a wallet or something like that.
It's fair, but again, I think this goes back to the original point of, yes, investors can go and put their own little floaties or life rafts onto a river, but it's pretty complicated to build an engine with a very complicated speedboat and really take that down the river in a fast way and navigate all the obstacles that are coming your way. So stepping away from the metaphor for a second, a really good example of this is the fact that we, run our own validators. And, Parker White, our COO, has a lot of experience running his own validators for quite some time. And, the average retail investor probably wouldn't know how to go and set that up and go and enhance yields versus what they can get on, say, a Coinbase, for example. So if you were to just compare our yields versus a lot of the different centralized exchanges out there, we're able to offer, somewhere around 20 to 40% higher yields versus a lot of the different centralized exchanges. Call it like 8% versus Coinbase averages like 5 to 6% or something like that. So that's one example of like our crypto expertise coming into play and providing what I say like is enhanced Solana accumulation in a way that ETFs and just buying on your own simply, doesn't quite cut it.